As we reported earlier, Japan's economy has shifted into low gear, and that has allowed China to overtake the Japanese as the world's second largest economy. For more on this development, pretty stunning as a matter of fact, even though it's been a long time coming, we're joined by Fred Neumann, senior Asia economist at HSBC in Hong Kong. Fred, we welcome you. Let's start with this simple question. What is wrong with the Japanese economy? There's been a lot wrong with it for a long time, but back in the first quarter, growth was at an annualized pace of 5%. Now it's down to less than 0.5%.
Well, unlike the other major economies like the US or even Europe, the Japanese economy was always driven mostly by exports, not by domestic demand, and so relied on China buying goods from Japan, and domestic consumers never really stepped up. So that left Japan vulnerable to a downturn in external demand, and then immediately growth weakened as well.
So the growth has weakened. What type of a situation does Japan and its leadership find itself in this morning with this shift in power from number 2 to the number 3 spot?
Well, I think that change in the spot will not have immediate policy implications for Japan. The Japanese leadership knew for quite some time that the economy faces structural challenges, that you need to really do something more drastic in terms of reforms. The Japanese economy is also suffering from a very strong yen. I think the implications that China is now larger is really something that had been already on investors' radar screen for a long time, and I wouldn't think it has any immediate implications for either policy or for markets as such.
Fred, you just mentioned the fact that Japan has a very strong yen. The yen is currently trading at about 86 to the dollar and has in fact appreciated in the wake of this GDP data. Is this just going to become that much more of a problem for Japan, the fact that the yen just remains strong?
It is, and it is actually an unusual problem to have, that you have weaker economic data actually strengthening your currency, and the currency is already too strong for Japan. And this really shows you some risk aversion in the global financial system and in Japan. The Japanese savers are bringing money back that appreciates the currency, and the government is desperately trying to avoid that. There are not many policy options on the table, however. All you can do really is you can try to loosen monetary policy even further. You can print yen to depreciate the level of the currency. We think that will ultimately happen. The BOJ may have to pump even more yen into circulation, and that will help in a little bit of a depreciation, but it's really going in the wrong direction currently.